You're listening to The Real Investment Show.
So I want to talk a little bit about the AI revolution. It's been kind of the forefront of conversations as of late, and particularly the market this year. And just, along with this, these AI revolutions, or I should say these revolutions occur throughout history. We had the Industrial Revolution where we went from agriculture to industrialization. And really when you talk about the Industrial Revolution that began in the 1800s and technically is continuing on as we speak, as we become more industrialized. But this is there's been phases to this revolution, right? So in the 1950s, it was the great space race, right? Huge advances in technology and space exploration, et cetera, which really kind of paved the way for computerization. And of course, what we did during the space race is we invented a lot of technologies that we use today, the cell phone, the microwave, a whole variety of things. And it was born out, they always say innovation is basically a function of necessity. And so when we have to do something, and it was interesting, there's a great movie with Kevin Costner talking about, and the title of the movie is Hidden Figures, and this is during the, trying to get a man into space, and they use human calculators, right? These are just a group of people that are super mathematically adept at running mathematical calculations, and so they call them human computers. They didn't actually have a computer, it was humans that were really good at math. And they would say, okay, send these calculations over, have them verified by the computers. And these were humans sitting in a room verifying these calculations. A really great movie if you haven't had a chance to watch it. But during the process of that, they needed to have faster calculations. And so they started bringing in computers doing Fortran so they could calculate things faster. And of course, it was taking up whole rooms at the time. And then, of course, as we get into the 90s, we get into this era of computerization. Computers start getting smaller. They start getting more personal. In the early 1990s, Hewlett-Packard launched a computer that could handle up to 100 Unix users all at one time. And it only cost $9,500, right? You think about what you pay for a computer today. And so we've continued to innovate and, create new technologies. Of course, as we got into the end of the 90s, it was the internet. And every company out there had to have something involved in the internet. When they announced earnings, it was, we've got a website up now that we didn't have before, and we're changing our name to pets.com. And everybody was jumping on that whole internet train to basically boost share prices. And so we went through that era in the 1996, 97, 98, 99. Stocks were rallying based on this whole internet generation, went kind of crazy in 99. And so today we're talking about AI, the next great revolution. Of course, along with that comes cryptocurrencies and everything else that kind of falls into that next wave of technological innovation, digital payments, automation, robotics, all of that. There's a new coin out called Pepe, which is it's a cryptocurrency after the meme frog. It's up 7,000% since it launched. According to Pepe's website, this coin was launched for the people. It has no formal team or roadmap, and is completely useless and for entertainment purposes only. And people are piling their money into it to speculate on its advances, right? So we'll see how long this lasts before somebody wakes up and smells the coffee and sells it. But this is all part and parcel of this revolution, right? So we go back through history and we can look at these periods of industrial revolution. And I've got a chart of the S&P 500 going back to basically 1900. And what we can see is that during these periods of revolution, whether it's computers or space technology or AI, that there's huge advances made in the markets during those periods. And then ultimately what happens is that markets then don't do a lot for a period of time. And there's a reason for that, of course, but we'll get into that momentarily. But I thought it was interesting because when we take a look at the market where we are today, is that we are currently seeing, and this is a chart of the NASDAQ from 1999 to 2000, overlaid with today's price action in the NASDAQ, this whole AI boom. So we have the internet boom, the dot-com internet boom versus today's AI revolution. And they're tracking very closely right now. And it suggests that, at some point here, we're going to get this kind of, this melt up in AI stocks, if the analogy holds, right? We'll see. But we're seeing a lot of that same type of mentality where people are piling into stocks because they're AI. And again, as we talk about the market where we are today, we have a lot of that action that's going on and lots of conversation in the media talking about the issues of, how AI is going to change our life. It's going to make things better. And of course, it's going to lead to a lot of job losses. And of course, people come back with the argument. They say, well, it's just like the internet. It caused job losses and people got other jobs. Yeah, they just didn't get as good of a job. Robotics and artificial intelligence are going to replace a lot of high-paying jobs. And the question is, what are those people going to do, right? We can't all be programming AI. Eventually, AI will program itself. So it's going to be challenging for the economy as we go forward. But what's important about that chart, let's go back to that chart for a moment, talking about these industrial revolutions that we have within the markets, and then those blue boxes where the markets just kind of go sideways. What was the driver of that? The driver of that was valuations. Now, importantly, in the previous cycles where we had these big, massive booms in the markets, we were starting from very low valuations, 5, 6, 7, 8 times earnings. Today, we're starting the AI revolution at 30 times earnings. So how much is there in terms of valuation? And this is important because when we talk about valuation, right, the old premise is, as Warren Buffett once said, value, price is what you pay, value is what you get. And I just broke down the number of stocks in the S&P 500 that are trading above 5 times price to sales. Now, Scott McNeely said back in 2000, when his company stock was trading at 10 times price to sales, he basically, asked, he says, you're kind of crazy paying 10 times price to sales for my stock. I'll just read you his exact quote. At 10 times revenues, sales, to give you a 10-year payback, I have to pay you 100% of revenues for 10 straight years in dividends. That assumes I can get that by my shareholders. It assumes I have zero cost of goods sold, and which is very hard for a computer company. That assumes zero expenses, which is really hard with 39,000 employees. That assumes I pay no taxes and is very hard. And that assumes you pay no taxes on your dividends, which is kind of illegal. And that assumes with zero R&D for the next 10 years, I can maintain a current revenue run rate. Now, having done that, would any of you like to buy my stock at $64 a share? How ridiculous those basic assumptions are. And so I just ran a list of stocks. I said, okay, and again, to maintain a 10 times price to sales, companies have to grow their earnings at 20% a year. So when you start getting at 5 times price to sales, 8 times price to sales, 10 times price to sales, how fast do these companies have to grow revenue in order to maintain that valuation? And when you start looking at these companies, NVIDIA, the top leader in the AI space right now, trades at 25 times price to sales. They're a very fast-growing company. It is unlikely they can grow revenues fast enough to justify 25 times price to sales at current levels. But that doesn't mean stock can't keep going up. You get down into companies like Apple, Microsoft, Google. All these companies are trading at very high multiples relative to price to sales. And Brent, put that chart back up. Because if you take a look, and I've highlighted some of the more popular companies that people are trading right now, Autodesk, Intuitive Surgical, Adobe Systems, Google, Meta, Analog Devices, you'll see your favorite stock on there. All these companies are trading at astronomically high levels in terms of valuations. And again, this is different this time, so to speak, because again, we're starting this AI revolution, which has actually been going on for 10 years now. We're 10 years into this AI revolution. It's just now become mainstream. It's now become the speculative meme. And what's important about that is what this suggests about where markets go to from here based on valuations. How much upside is there left? There could be a lot more. But it's getting harder to justify those revenue run rates at current levels. Be right back after the break.
The Real Investment Show.
I just want to finish up our conversation on AI. And again, when you go back and look at the late 90s when the internet boom was going on, it was interesting. And by the time the media picks it up, you're generally pretty late into the cycle, and you're starting to see a lot of magazine covers talking about AI. The AI boom, the AI is here. And back in, 1999, September of 1999 to be exact, Time.com did a special report called GetRich.com, Secrets of Silicon Valley. Of course, it wasn't very much longer until we got March of 2000, 6 months later, and that was the peak. But again, by the time the media picks up on this stuff, and by the time the average person starts to pick up on this stuff, you begin to get, a sense of kind of where we are in the cycle. In fact, right now, if you take a look at the Google searches for AI, they have absolutely exploded over the last few years. And, this is, for a long time, nobody was really searching AI. Over the last several months, it's just, the number of people searching for Google on AI has been, astronomical. And this is, but what's important about this is that, when we take a look at where money's flowing into the markets, and we talked about this in today's commentary for our daily market commentary. It's on the website now. You'll get an email at 7:30 if you're subscribed. But we talk about the deep disparity between the S&P, where the S&P is trading, and the equal weighted S&P. And so basically, once you start looking at how the market has performed this year, and this was a great piece by SocGen, Société Générale, had came out and did a report talking about this, is that was it not for these really 5-10 stocks of the S&P and the NASDAQ by extension, because it's the same stocks, it's Apple, it's Microsoft, it's Google, etc., the market wouldn't be up 8% this year, it'd be down 2%. The rest of the market is not participating. The only stocks that are moving up right now are these stocks related to AI. And so the point about this, and the thing that you need to take away from this, is there's, we own some of these stocks in our portfolio already, and for the very same reasons everybody else does. But the point about this ultimately is to remember that chasing markets ultimately is the purest form of speculation. You're betting on prices going higher rather than determining if that price being paid for those assets is a value. There is a function to where sales growth, earnings growth, et cetera, will not justify those valuations. And so there's going to be a lot of money made in AI. And that's why we certainly want to participate while we can. But it's important that you keep in mind the valuation that you're paying for stocks. Because at the end of the day, just like I showed you that chart to begin with, at the end of the day, this revolution will end. And I don't mean it's going to end like AI is going to go away. It'll just become an adopted part of our lives, just like the internet was. And the hype, and when it becomes a normality that everybody's using AI, et cetera, the benefit derived from the artificial intelligence will be limited. It'll be capped. And then markets are going to have to find out whatever the next new thing is. And again, this is why the markets kind of then go through a period of 5 to 10 years waiting for the next new thing of whatever it is. And so we've had a 12 years of this market advance. It is a very long market advance. We've been trading on AI for 10 years now. It's just now become public knowledge, so to speak. And a lot of that undervaluation in these companies is now overvaluation. So this era will end, not 6 months from now, not a year from now. Good, but it's not going to end tomorrow. But when it ends, and it will be a function of valuations. And again, the big difference between this time and previous times is that we're not launching a revolution from cheap valuations. We're launching this revolution from 30 times earnings, which, again, is something that we have to consider when making our investments. So again, I'm not telling you to go sell all these stocks. I'm not saying that at all. You want to own them right now. Just understand that because we're starting this advance from such a high level of valuation, we may not get the, build your way to riches buying .com stocks that we saw back in the 90s. Just something to think about. But that's today's article. It's on the website at realinvestmentadvice.com. It's called The AI Revolution, a Repeat of History. And just really kind of going through this analysis of looking at kind of where we came from and where we're going to. All right, that wraps up the show for the day. We'll be back tomorrow, of course. We'll bring you up to date on some of the retail earnings we've got coming out. Have a great day. Hope you enjoyed the show. Be back tomorrow. Get by the website. Our latest article is out on the AI revolution. It's on the website now, realinvestmentadvice.com. We'll see you tomorrow.